Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Robert James from Carver State Bank. Carver State Bank is a unique institution, both a minority depository institution, MDI, and a CDFI, a community development financial institution. That's a kind of small overlapping subset. And so we talk about what it means to serve those communities, what the different challenges maybe that are different than a traditional bank serving a more general community population might experience. We really dive into those topics, into how he thinks about digitization, fintech partnerships, doing a lot of work in fintech partnerships, but also combining what Robert called the high tech with the high touch, which I thought was a great phrase and a great strategy, to be honest. And then we also dove into the four building blocks of financial freedom, as he calls them, and what those are, and how they're really focused on delivering on those building blocks. And in the focus, I think, really importantly, on how those building blocks and financial freedom equates to the ability to participate in the fullness of what it means to be an American citizen and unlocking opportunities for those communities. I thought that was a really interesting conversation. I appreciated Robert joining us to share his thoughts. So please enjoy this conversation with Robert. Robert, thanks so much for joining the podcast today. I appreciate you making the time.
Jeff, thanks for inviting me. Look forward to the conversation.
Yeah, it should be a fun one. I'm looking forward to this. I'm starting all my podcasts with the same question now, so I'm gonna ask you. I think the most common description I've had of bankers' careers is that they're accidental bankers. Not many of us grow up dreaming of being the banker. Tell me about your path to where you're at and kind of how you got to this position and being in the banking industry.
I'm going to steal that accidental bankers phrase.
I stole it from other folks. Somebody described it that way.
It's okay. We'll just steal from each other. No worries. So I grew up in the family of a banker. My father has been the CEO of our bank for 50 years. So basically my entire life. And I never wanted to work in the bank. So I never had a summer job in the bank. I never worked a teller line. I was never a courier. I never did anything in the bank. I got away from home as quickly as I could. I thought I wanted to be a lawyer. I became a lawyer, and I found my way to banking because the practice of law was very frustrating to me because it was very limited in terms of what you could do on a project. I was a corporate lawyer, and it was frustrating because for many reasons. But one of the reasons that was frustrating to me was that the lawyer never gets called until the deal's already basically decided. I mean, if you're a transactional lawyer, the business part of the deal is done before they call you. They call you to have you document the deal, and then the deal gets done, and people go on and actually execute on the thing they made an agreement on, and you don't have any involvement in that either. And so
unless it goes wrong.
Well, unless it goes wrong, and I didn't like that
call
part
you
because I'm not conflict.
Not a
I
litigator.
don't like conflict, so I didn't like that part. I ended up really gravitating towards things that had to do with inclusion, and so I started a B2B e-commerce company back in the days when that was supposed to be a thing. That was around supplier diversity and helping diversify supply chains for corporations and local governments. That turned into a kind of a consultancy around those issues. Then I did a little bit of commercial real estate development, again more focused on the harder things, getting a grocery store into a community that didn't have one, getting basic services to places that didn't have them. And what I found that kind of was the common thread of all of these different entrepreneurial things that I did was that for African American business owners, diverse business owners in general, developers, whatever, capital access was always the key component. And it took me doing a bunch of different things to realize that, hey, my family's been involved in this little bank that actually provides capital access in these spaces that I care about. And so that's really what kind of pulled me into banking, not just the familial stuff, but really coming to it on my own.
Yeah, I love that because I also love your kind of talk about capital access because I think it's so easy to think of lending and credit from the bank point of view. And it's easy sometimes to forget the importance of that access to capital in terms of unlocking opportunity, be it for a small business owner, be it for a student looking to go to college or someone looking to buy a car. Those opportunities are really limited by the ability to access capital. And that mission oriented nature of like making capital available to people who need it is I think it's a great grounding principle for what we really do in the industry.
Yeah, yeah. I mean, I think one quick point on that, you know, and I didn't study finance or anything. I was a political science major. I went to law school, but um, there is a direct connection between, you know, access to capital really unlocks a lot of what it means to be an American. And if you don't have it, you cannot fully participate. And I don't think we really make that connection as much as we should. And I've given a couple of speeches recently, and one of them, several of them, I've noted that, in Dr. King's last speech, the night before he was assassinated, he was speaking to a group of sanitation workers that were on strike in Memphis. And in that last speech, he literally exhorts the crowd to take their money to the Black owned bank in Memphis. And he makes a connection in that speech between civil rights, voting rights, and economic rights. And
Yeah.
how and those three things kind of make up, those three legs of the stool make up full participation in Americanness. And the access to capital piece is one that I don't think we necessarily connect to the other two, but if you don't have it, you cannot fully participate. It's the happiness part. If we're pursuing
Yeah.
life, liberty, and if it's life, liberty, and the pursuit of happiness, the happiness part I think has to do with being able to access capital.
The pursuit of happiness often requires borrowing money to pursue certain things. And
That's right.
people, I've listened to that speech many times. I mean, having grown up in Memphis, it was one of the ones I like to listen to. Dr. King's such a great speaker. And I think people forget how much his focus shifted from purely civil rights to the economic rights
Yeah.
and the need to have real participation and ability to participate fully in order to realize the fullness of American citizenship and not just the lack of being prevented from certain things, but the ability to actually access things that maybe weren't unavailable, but were practically unavailable because of that lack of access to capital. It was a big shift in his focus in many ways towards the latter half of his career that people often forget. It's a great reminder. Well, so your institution is really interesting. It carries two designations that are rare, rare among themselves, and certainly in conjunction, even more rare, which is to be, a Black-owned or, more generally a minority-owned depository institution or an MDI, as well as being a CDFI. So, can you, for the audience who may be less familiar, explain what those designations are? And then I'd love to dive into how that kind of changes your experience or challenges or, what you as an institution are focused on.
Sure. So Carver State Bank we're celebrating our 95th year this year. We were founded in 1927 by a Black man in Savannah named Lewis B. Toomer. Mr. Toomer was a great entrepreneur in his own right. He was one of the first Black people in the state of Georgia to be a licensed real estate broker. He did a lot of real estate development himself. He started this bank to provide access to capital. And so our bank has been an MDI or minority depository institution for its entire existence. And that is a designation that is conferred by law. FIREA Section 308 actually defines what a minority depository institution is. And it's what it sounds like. It's a bank that's owned or controlled by members of a designated minority group. Then we also are a certified CDFI or Community Development Financial Institution. And that is, yet another federal designation that is conferred by the United States Treasury Department. And that designation requires you to apply for it. You have to apply and you have to be a financial institution, obviously. But then you also have to have a stated mission of serving an identified target market that is low to moderate income, essentially, or disadvantaged in some way. You have to be accountable to that community, and you have to provide at least 60% of your lending on an annual basis in that targeted market. And so we have both designations. The CDFI designation was something that came about during the Clinton administration. Bill Clinton saw what was happening with a bank called Shore Bank in Chicago in terms of providing access to capital on the south side of Chicago, and he wanted to kind of replicate that model across the country. And so they created the CDFI fund, which is an instrument that's inside of the Treasury Department. And that's the organization at Treasury that kind of certifies you as a CDFI and provides resources to help you maintain your commitments to that targeted market.
So, how does that change the way you approach the business of banking? Being, either, I mean, I feel like those are different designations with different requirements, but from a mission point of view, probably substantially aligned in the communities you're trying to serve and the ways you're trying to do that. But how do you think that shifts the way you think about, your role and responsibilities and what your objectives are as an institution versus, a more traditional bank that doesn't carry those designations?
Yeah. So for Carver, like I said, we were founded in 1927. The CDFI program was a 1990s thing. We looked at the definition for it and we said, well, we've been doing that since our founding.
That's just who we
So
are. That's just
that's just who we
what we
are,
do.
just who we are, just what we do. If you look at our CDFI target market, it involves a couple of different markets, and I don't want to get too wonky or in the weeds on you, but basically 90+% of our lending on an annual basis is going to be to African American people in the state of Georgia, and that's not because anybody else couldn't make application and get a loan. It's because that's who comes to us. That's who we serve. So we are really focused on making sure that folks in that community get capital and access to it, and that just so happens to fit what this program designation is. And so we haven't had to change much about what we do fundamentally in order to be a CDFI. It's more a question of tracking and reporting what we do and using those programs to accentuate what we do more than anything. I think other banks um, that are strictly, I mean, we're profit motivated. We have shareholders. We're profit motivated, but we're committed to this kind of vision and mission before we became a CDFI.
Or you became a CDFI. Yeah. Well, are there unique challenges? I mean, I imagine like that, those communities, those the kinds of businesses and small businesses you're trying to provide access to capital to, or the consumers have a different set of challenges, needs, expectations, maybe ways that they interact. What are the kind of unique elements to you in serving those communities that maybe are stories or experiences or challenges that you would say my colleagues who are in a bank serving a different kind of demographic that's broader don't face or experience differently?
Um, there are many. I think the biggest one is we come back to this same kind of access to capital issue and historical access to capital. And I think particularly over the last couple of years, many of your listeners probably will have um, gotten more familiar with the racial wealth gap and these issues that continue to plague American society. And you know we um, we were talking about Dr. King's assassination. When Dr. King was assassinated, the racial wealth gap was actually smaller than it is now. So we've actually lost ground in terms of, and when we talk about a racial wealth gap, what we're talking about is the 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 family wealth in Black households is less than 10% of that of white households, and that number has actually that gap has grown since Dr. King was killed. And so that issue is kind of fundamentally at the source of what makes it different or more difficult for us to bank many of our customers. Um, so when we're doing small business lending or we're doing commercial real estate loan or consumer loan, there's less collateral. Typically, the collateral might be undervalued when you can get it. You have to be a lot more creative in terms of bringing different kinds of credit enhancement to the table to make deals work. We are constantly dealing with sort of a not just a wealth gap, but also a gap of sophistication. I call it an acumen gap. It was really apparent when we were doing PPP loans during the pandemic. The PPP loan process really shone a light to me on how hard it was for minority-owned businesses to access money because that was a pretty simple loan product, relatively speaking. But if you didn't have your tax returns at the ready and were not able to point to a payroll that you could download from, Quicken or whatever, QuickBooks or whatever you're using, if you didn't have that stuff immediately available, it was actually very hard to access. And most small businesses in the Black community are sole proprietors who really don't necessarily keep strict books and records the way that they might if they were bigger and they had employees. I mean, it was very challenging. And so we spent a lot of time hand holding and helping people to identify. At one stage in the PPP process, we actually engaged a consultant specifically to work with customers to help them because we couldn't do it and they couldn't afford it, but we knew that they needed the capital, so we hired somebody to help
to help them with paperwork and
customers
yeah.
access, do the paperwork, and so and to apply for
Hmm.
forgiveness. And so, a person might be a great painter or a barber or a landscaper, but he's not necessarily sitting around doing the books. He's doing the work. And so that's, those documentation issues, support issues, what kind of equity capital are they bringing to the table? All of those things can become issues in every area of lending in the minority communities, particularly the African American
I wanted to ask about a different thing because you mentioned that you guys are, to me, that you guys are shifting to a digital first approach to all the
community.
products you're doing. So I'd love to understand a little bit about your vision for that and what's driving that. And then also, one of the concerns I hear about digital first pertains to LMI communities and maybe the lack of consistent access to devices or internet. And so I wanted to get your perspective on that as someone who's serving those communities and also focused on kind of driving digital adoption. How do you think about, what the objective is and the challenges that some of those communities might have in accessing technology versus other communities in terms of the availability of devices, internet connectivity, the rest of it that's kind of required to access those things?
Sure. So I'll start from our mission. So we have a stated mission, which is to provide the building blocks to financial freedom. And the way that we're going to deliver on our mission, pursue our mission, is to provide what we call our four building blocks to financial freedom. Number one is to build money. Number two is to build homes. Number three is to build businesses. And number four is to build communities. Now, a digital first approach in build money, for example, is represented by our partnership with Upstart. We're in the process of implementing now. We have not implemented this or launched it yet, but we plan to before the end of the year have a partnership with Upstart, leveraging its technology, which provides sort of instant approval for consumer loans in a way that's efficient. It's not something that we could do efficiently or profitably in a manual way. And so, and they also have an algorithmic approach that allows us to mitigate risk, but still climb sort of down the credit score ladder and still find and offer, prime credit to folks who might not necessarily score and show that they should be able to access prime credit. In the build homes area, we're launching a fintech partnership with a company that's going to help us kind of reinvigorate our mortgage business so that we can, do the mortgage origination piece and kind of take a person from application all the way to closing in as digital a way as possible. You're still going to, have to show up at the lawyer's office and sign your documents, but we're also adding to that an experienced team of originators who are going to work with customers who've got 20 plus years of experience working with customers in the African American community here in the state. In the build businesses vertical, we're going to be doing yet another fintech partnership where we're adding kind of an online small business application process. And we're going to continue to look for partners in the businesses vertical so that we can you know, further automate the small business lending process as much as we can. In the build communities piece, that one really refers to, kind of community development projects, uh, projects that would use, new markets tax credits or low income housing tax credits to stimulate investment in a community. Those are not really, you can't really do that with an online process. I mean, there's no algorithm for putting a grocery store in a food desert. You're going to end up having to manually work that one. So, we might be able to create an online application process, but that's about it. But back to your point, your question about, access. I think that I think there's a pretty high rate of adoption, particularly on mobile. And so I don't think the studies that I've seen haven't shown a great distance between mobile adoption in the African American community that we particularly serve, or the community at large. I do think I think there's still a rural issue, a rural broadband issue. I was on a I'm on a advisory board for the FDIC, and community banks across the country were participating, and it was a virtual meeting, and it was my first one. And one of the bankers from a rural area said that it was really hard for her to participate in this Zoom or whatever it was, WebEx, I can't remember what platform, because she doesn't have broadband in her community. And so if she doesn't have broadband at the bank, that means none of her customers do either. And so that's a real thing. I think that people kind of tend to forget about that as an issue. But I think in terms of accessing financial services, people are going to be able to use mobile to access a lot of this. Um, Carver is a, like I said, 95 years old. We have historically been at a very low tech, very high touch bank. We pride ourselves on the community relationship, on knowing who our customers are, on people coming in. It's a community hub. We've got to maintain that high touch, but we've got to be high tech in order to attract new customers, in order to expand our reach and do it in an efficient way. But I think if we find, particularly on the mobile side, I think if we can find ways to help folks access our services and products through mobile devices, I don't think we'll have that great of a digital divide kind of challenge.
It's really interesting you make that highlight on mobile, because I do think it's a reminder to me that so many people are focused on digital transformation, and for the most universal access, digital really needs to be mobile accessible, not necessarily an app versus a web, but like you need to be able to access it and fully utilize those services on a mobile device. Otherwise, you probably have in that way, for most communities, a bigger accessibility problem if you're desktop only versus mobile, compared to the broadband issue, which is really a more of a rural issue. You're probably right, versus most people have pretty good, broadband via mobile in most urban, suburban, exurban type areas.
Yeah. I mean, I think the issue there is going to be, I think for like a consumer product, consumer lending or mobile apps, it's the manage your accounts and all that. I think that stuff is the lowest hanging fruit for mobile.
Yep.
I think once you start getting to things where you've got to provide and upload documentation, that starts to become harder and harder in a mobile environment. If I've got to upload tax returns for a mortgage application or for a small business loan, that becomes harder to do if I've got to scan every page on my phone, of a 30-page long whatever, and upload that. And then, so then you start to run into issues. And that's where the high touch part comes in for the bank. That's where we still have to have physical locations where people can bring their documents, where we can walk people through the process in person, and make sure that folks continue to have access to credit, in a way that is affordable for them, and allowing them to participate fully in the economy.
Yeah, I wanted to ask you just to dive a little bit more on this. I like the phrase high tech and high touch. It's a nice, got alliteration, and it sounds good. But how do you think about balancing that? I mean, many people think of tech as the elimination of touch, or at least the human touch. And I think I really like the idea of having both. But how do you think about where one is appropriate versus the other, or how you balance where you're kind of directing consumers in terms of a technical interface versus a human experience in branch or on the phone or otherwise. Where's the balance, or how do you think about the delineation between where one is the right tool and versus the other?
Yeah, I mean, some of it will be driven by generational differences amongst our customer base. You know, our older customers tend to want that physical, in-person kind of analog experience. Although we found during the pandemic when we had to close down the lobbies and we had to drive people more to, using the ATMs or the drive-through or calling on the phone or using the internet, that we did see adoption of our online banking increase. And so it's not that people can't do it, but it's about getting older folks used to doing it. I think for us to continue to attract new customers, it's imperative that we have the digital access, and folks in probably our generation and younger are probably going to first look to your digital presence. What's your digital footprint? Is your app easy to use? Is the website clean and easy to navigate? All of those things are going to be critical. And then when you need, but when they need somebody, they're going to want to be able to pick up the phone and talk to them. And that's going to be one of the many challenges that we have as we grow our institution and look to provide more services to particularly younger demographic, is that they're not going to want to call you until they want to call you.
Yeah.
You know,
And when they want to
and
call
when
you,
they
they
want
don't
to
want to
call
go
you,
through a 24-step phone tree to get a hold. They want to not talk to you when they
yeah,
don't, and when they do, they want to get you right away.
they want to get you right away, and that's not going to be that's not a unique challenge that we're going to have. I think everyone in the whole service economy has that challenge, and figuring that out. But we're trying to automate where we can, and we're going to have people where certainly you still have to have people,
Mhm.
and where you um, um, and where it's advisable, particularly with, like I said, our mission and the community we want to serve. I think we're just going to have to walk a little slower in terms of forcing everyone onto some digital platform.
Well, you may be walking slower in terms of forcing, Robert, but I mean, you said fintech partnership 3 times in a minute. That's more than most banks I talk to of any scale or focus on any demographic. So I think you're pushing the envelope, and I think you're right. Finding the way to balance the ability to interact digitally when I want to, with the ability to interact in an analog way when I want to or need to, is finding that balance is, I think, the magical point, because it is. We want both, right? I mean, I'm that way. I want to interact digitally when I just want to check a balance or I want to transfer I don't want to talk to somebody yet. And then when I've got a question about a loan product, like which is the right product or a retirement account or whatever it might be, like, then I don't want to like read a 25-page FAQ. I want to talk to a person and say, hey, here's my question. How do I think about this? And so if you can balance those two, I think that's a great place. But you guys seem to be pushing faster than most I talked on the digital front. So kudos to you for that. Before we wrap up
Thank
here,
you.
I
We're
wanted.
trying.
Well, sorry, I want to interrupt you there.
I said we're trying.
Well, so far so good. It seems like. Um, before we wrap up, I did want to ask you about your role with the National Bankers Association, and have you just describe that organization and kind of what it is, because I think it's interesting. I know we started off with the MDI CDFI discussion. This is related, but the conversation was too interesting to just jump right to this. But tell me a little bit about the NBA and what its role is in the industry.
Sure. So the National Bankers Association was also founded in 1927, coincidentally, and
Wow.
it was originally called the Negro Bankers Association, and it was representative of the black-owned banks in the country. It was kind of an opportunity for those institutions to come together and support one another, and create an advocacy voice for those organizations. The uh, the association became the National Bankers Association, and it broadened its mission to represent all minority depository institutions across the country. And I serve as chairman of the board of that organization. And so we represent the interests of not just Black-owned banks, but also Asian-owned, Hispanic-owned, and Native American-owned banks across the country. And we really, focus on policy at the Washington D.C. level, making sure that the unique needs and issues of the 150 or so minority depository institutions are met when and considered when regulatory changes happen, when changes in the law happen. But we also really focus on making sure that we create strong partnerships between MDIs and the main Wall Street type banks. We want to create strong access to partnerships there. We are really focused on collaboration amongst MDIs to accentuate the way that we can deliver services and be more impactful in the communities we serve. We really are also focused on telling the story of MDIs, making sure that people understand the rich history of these organizations and institutions and the critical roles they play in their communities. And then we're also helping MDIs build capacity and do things like create fintech partnerships with technology providers. We're helping to provide capacity for organizations to track their impact and report on their impact, so that not just investors but also government agencies and the communities know what makes these institutions very unique. And so we're doing a lot of really exciting things at the MBA, and I'm fortunate to serve as chair of the board, and hopefully I'll be finishing up my 2-year term at the end of the year.
It's exciting organization, and I think you gave a great overview. So thank you for that. It's very interesting work. Well, I can't believe it's already been half an hour. We kind of ran through our time. Time flies when you're having fun, I guess. But I do have 3 questions that I have one that I start with and 3 that I end with for everybody. So if you don't mind, I'd love to throw them at you now.
Okay, sure.
The first is what's the best piece of career advice you've ever gotten?
Wow. It probably has to do with finding something that you really love and are passionate about to do, so that it doesn't feel like work all the time. I think is really important. I mean, and even when you find something that you're passionate about doing, there's still a lot of hard work that goes into it, and you might get sick of it, but but of certain aspects of it. But if you're passionate about what you do and you feel like you can really make a difference doing something that you care about, I think you'll be successful. So I'm sure plenty of people told me that. And then one day I decided to listen.
One day you found it. Sometimes it's hard to find the thing, but I think if you can find that, you kind of talked about things you're good at and things you're passionate about. If you can find the overlapping section of jobs that have things you're good at and things that you're passionate about, feel like you make a difference. That's a way to find happiness, I think, at work. What's the best advice you've got? So you're another accidental banker. I feel like everybody I talk to who's a banker is an accidental banker. But what's the best advice you've gotten about the consumer banking or consumer lending industries in general?
Make sure you're in compliance. That you make sure you stay in compliance, and make sure you really communicate with your regulator about what you're doing. I think it's really important, and so we're walking a little slower than maybe we could, because we want to make sure that we're very clear on what we're doing, and we want to make sure that our regulators are really clear about it. And so I think you can avoid problems if you make sure your regulator is comfortable before you launch a new product, particularly in the consumer space.
Yeah, I will say the institutions I've talked to that have the best relationship with their regulators tend to be the ones that are most proactive in communication and bring the regulator along, as opposed to saying, "Hey, look at this thing we did since the last time we talked. Didn't great." Like, I wanted to know about that maybe in advance, not to say yes or no, just to kind of be brought along the journey. I think that's great advice. And my last question: what's one bold prediction for the future?
One bold prediction for the future is that Carver, which is a $70 million or so asset size bank right now, will be over $1 billion in assets by the time we turn 100.
All right, that's what I'm trying to do my math. It's like just a couple of years.
It's 5 more years.
5 years, 70 million to $1 billion. That's a bold. I look forward to celebrating that prediction being accurate with you. That's a bold prediction, but a lot of ambition. But it sounds like a great mission for you. So
we got to put it out there.
Yeah, you got to set ambitious targets. That's an ambitious one, and I wish you all the luck in achieving it, because that sounds like a fabulous thing to achieve. So Good luck. And Robert,
Yep.
thanks for coming and sharing your perspectives and your insights. I really appreciate it. I think it's a very interesting conversation for the audience. So thank you.
Thank you very much, Jeff. I really appreciate being with you today, and look forward to hearing this show and many others on your podcast.